Welcome. In this video, Zbcn coin rise will continue until where? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. There is a falling curve that stands out prominently on the chart. This curve indicates that the price action has been under downward pressure since the previous peak, and that the market has remained in a sell-heavy trend for a period of time. This type of curve is usually the result of prices continually making lower highs, and is referred to in technical analysis as a falling trend line or falling resistance line. However, in the current situation, a break above this falling curve, meaning that the price breaks this critical level to the upside, could herald a very important and positive development. If the price breaks above this falling curve, it will also create an important break in investor psychology, because an asset that has been under downward pressure for a long time can break such structures and give the beginning of a new uptrend. Such a breakout indicates that buyers are becoming more dominant in the market and sellers are losing their power. Therefore, the fact that the price is now approaching this falling curve suggests that we are at an extremely critical stage and that a possible trend reversal in the market is at the door. This falling curve is technically not only a line of resistance, but also a psychological boundary where the price has turned down many times in the past. Therefore, breaking through this level could be perceived as a strong buy signal by many traders. Especially if daily closes start to occur above this curve, the market is likely to enter a new bullish phase. This could create significant opportunities for both short-term traders and long-term investors. If the price tests this curve within the current technical structure, it is a very promising stage and one that should be carefully monitored. In the past, it has often been observed that prices often react quickly and strongly when such structures are broken. In other words, once the price breaks above this level, the market may suddenly experience increased buying pressure, and the price may begin an accelerated rise to new levels. This curve on the chart represents not only the price action, but also the general psychology of the market. A price that stays below this curve for a long time can mean a zone of distrust for many traders. However, exceeding this limit indicates that the market is regaining hope. Investor confidence is rising, and risk appetite is reviving. This paves the way for a healthier and more permanent rise in the price. The formation of such a technical structure has been observed many times in the past and has usually resulted in a strong reversal of direction. Therefore, price movements in the current position should be carefully monitored, especially candle closures on this curve should be confirmed, and trading strategies should be shaped accordingly. This is because such breakouts provide critical information for traders to both determine the trend direction and readjust their positions. In addition, if the price breaks, this curve is supported not only by technical but also fundamental factors. The chances of the uptrend becoming more permanent and sustainable increase. For example, if fundamental factors such as positive news flows, increased trading volume, and signs of a market-wide recovery come into play, this breakout could turn into a major acceleration. When such a scenario materializes, the positive sentiment that will spread across the market may prompt more investors to move to the buy side, accelerating the upward movement of the price. To summarize, this falling curve from the top to the bottom has represented pressure in the market for a long time. However, the price is now close to this structure, and if it can successfully break above this line, it would be a very strong and positive signal. Because such breakouts, both technically and psychologically, increase investor confidence, indicate the beginning of a new era in the market, and can bring higher prices. But we cannot decide the analysis only with the curve. Let's look at other metrics. Keep watching. When a Fibonacci retracement is applied from the top to the bottom on the chart, some of the levels we encounter are quite critical from a technical point of view and indicate areas that should be carefully monitored. In particular, the 0,618 and 0,786 levels, which attract the most attention among the Fibonacci retracement levels and have a great impact on price movements, have worked many times in the past and played a directional role on the market. These two levels are often referred to as resistance zones by both technical analysts and traders. When the price reaches these levels, some slowdown, pause, or profit realization may be observed in line with past experiences. However, this in itself does not mean that the price is weakening. On the contrary, it may be a harbinger of a stronger and more robust rise if these levels are exceeded. The Fibonacci 0,618 level is often referred to as the golden ratio and is considered one of the most important levels in technical analysis. This is because many traders see it as a strong resistance or support point. When the price reaches this level, there may be hesitation in the market, as some investors may realize their profits at this point. while others may hold or increase their positions in anticipation of higher prices once this level is broken. Therefore, the struggle when the price hits the 0,618 level can often cause short-term volatility. However, breaking through this level signals that the market has regained upside momentum, which paves the way for the price to move higher. The 0,786 Fibonacci level is usually considered as the last resistance. It acts as the final limit of the price's correction from the bottom, and many traders will revise their positions if it is reached. However, this level is also one of the most meaningful resistances to break, because an upside breakout of 0,786 could indicate that the price is no longer just in a correction, but that a larger trend move has begun. This breakout would reassure investors and could lead to renewed interest in the market. The fact that the price is currently close to the 0,618 and 786 levels is an extremely important technical structure to watch carefully. At first glance, these levels appear to act as resistance, but in fact, a consolidation of the price in these areas, that is a short-term rest, could mean the preparation for a new bullish wave. This is because many strong rallies are preceded by a short-term breather at such resistance levels, and then a much stronger attack. From this perspective, the current structure is not a threat, but rather an opportunity. In addition, if the price holds at these levels, that is starts to make daily closes above 0,618 and 0,786. It shows that the buying appetite in the market is increasing, and investors' hopes for the future are rising. This is a very positive signal for the price to target higher levels. Also, with a break of these levels, short-term sell-side traders who place their stop losses just above these areas may be out of action, which could give the price an extra upward impetus. These two levels also have a huge psychological impact. This is because a large number of traders question their positions, develop new strategies, and see significant increases in trading volumes. Since large investors or institutional funds are known to reference these levels, breakouts in these regions are supported by higher volumes. This, in turn, increases the persistence of the price and lays the groundwork for a more robust uptrend. When we analyze the chart, we observe that the price is moving quite meaningfully within the Bollinger Bands and is currently experiencing a certain pause at the level corresponding to the middle band. Although this pause may initially give the impression of a superficial resistance, it can actually be interpreted as a precursor to a larger move. Due to the nature of the Bollinger Bands, this level, technically equivalent to the 20-period simple moving average, often serves as a point of equilibrium for the price. When the price reaches this level, it digests past volatility, gains momentum, and then determines a new direction. A similar scenario appears to be developing now, and the price seems to be gathering strength for an upward breakout. In particular, the recent recovery movement that started from the lower band has increased upward pressure, which can be considered a significant technical development that strengthens the likelihood of the middle band being breached. If the price has approached this level, not with low volume, but with healthy and balanced volume increases, it indicates that buyers are entering the market with confidence and that the trend may evolve into a sustainable upward movement. In volatility-based indicators like Bollinger Bands, an upward break of the middle band typically leads to a movement toward the upper band. This can be considered a technical signal that the price may reach higher levels in the coming days. It is advisable to check the Bollinger Bands periodically. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.